And as we do every Wednesday, we talk to our man Teddy Kekstadt. Teddy writes the outstanding Tiger Forex Report, folks. You can check it out. Run under the newsletter tab. It's a great time to check it out with everything going on in this market, whether you're talking about yields, currencies, whether you're talking about the Fed or just tariffs. We have volatility in this market, folks. Check it out. You get a 30-day money-back guarantee. It's only $97. You can sign up while we're talking to Teddy right now. Teddy Kekstadt, good morning.
Good morning, Tommy. What a volatile week we have going, huh?
Whew, and I don't think it's going to slow down anytime soon, Teddy. But yeah, we got action. I can always tell when I'll wake up in the morning, and not like I'm antsy, man. I enjoy the mornings. I wake up early. I'm with Tommy, but I can always tell when I'm really quick to look at my phone and say, where are the markets? Because everything is just moving so quickly right now, for sure. Where do you want to kick things off, man?
Well, it's been quite the wild ride. I like the fact that right now we have a little rally going on in the bond market, and we have a nice little slide going on in crude. You can see how it's impacting the U.S. dollar yen for sure. That's the one currency I have to say that I think is, we've been talking about this, how especially if oil can at least stay on its lows and if yields get an uptick, that we'd probably see no matter what, at least a sell-off in that market, and no matter what, if there's a divergence between other currencies or not. So, and then the whole tariff thing over the weekend, and I've been saying for a while, be very cautious about your holding your trades, especially in the currencies, because of the volatility that we're most likely going to be seeing for a while. And here we go, shabam, it's here, and I don't think it's going to stop for quite some time. I believe we're going to have some trends that get set eventually, but right now, I think we're in for a wild, choppy swing fest going on, man. You got to be nimble, you got to be quick, and you better be ready to duck and dodge.
I like it, man, and I agree, because I don't, and it kind of makes sense. There's a lot of variables that are changing pretty quickly right now, and so it would make sense. The market's trying to reprice those on almost a 24-hour basis right now, coming into a new administration, volatility, and yeah, that yen. Talk about a pullback. I guess, what do and you've walked us through the dollar and the individual currencies, which is pretty cool. And yeah, that yen, we got gold at all-time highs right now. What do you think about the DXY in particular at this price level, Teddy? We're at 107.548. I have it right now. We've been consolidating between about 100 and 108 for almost 2+ years. What do you think about that dollar at 107.5?
Well, I think you're going to see some trends eventually start to manifest in the currencies, especially at least until we have, well, actually, I think what's going to happen is after we get a second rate cut, that's when you're really going to start to see some trends. Until then, I think we're going to be kind of like basically going back to the other end of the range, meaning that, yields are going to start to retrace, and they're going to start, remember that everything is already priced in that's been done. We haven't gotten to this extra half a point. So we could literally have a big retraction in yields. Remember that the Fed's been cutting rates and the market's been going up in price, as far as the cost of money. So now it's time for that rubber band effect to come back. Does that mean that we're going to go back to historic lows in that again? I'd be very cautious on that one, because I think that the Fed, no matter what, they don't trust in everything that's going on. Remember everyone that was like, you can't do tariffs, it's going to cause so much harm. Well, look at what it did. And within 24 hours in one country and 48 hours in another, we got everything we wanted, and all of a sudden the tariffs are off the table now. It's just showing, like, guess what? You can't have a long-term thinking about this stuff right now. And right now, I think the world is very reactionary, and we gotta be ready for these swings. So and these are things where I think that we're gonna go back. The market's going to go back to the median price. Right now we've been pushing the outlier effect. So now we got to come back to that medium, and I think that's what we're going to do. You're going to see yields keep on retracing a little bit. I'd be cautious as a bull. I think you're going to see it be a grinding bull, and I think you'll see some harsh sell-offs. Anything that could give an inkling for yields to go higher, I think you're going to see a lot of fast money being made on the sell side. So, and that's going to impact the dollar too. So I think it's going to be a grind lower, as far as for the dollar index and the dollar against most currencies, because the reality once again still is that, we're talking about the yield fundamental. what about the economic fundamentals? Those outweigh it, and that's really where you have to look at it. So I would say like currencies like the Aussie and the New Zealand, any rally against the dollar they have is going to be short-lived. It should be viewed as definitely a correction and not the beginning of a new trend against the dollar long term. So
Nice.
With the U.S. dollar yen, that's another case. I've been talking about that one just because then you have the oil fundamental and the yield fundamental that it's very easy for the yen to gain against the dollar in the short run, And see, this is another thing too, is that, remember that when dollar starts to come back again, our exports become more, potentially can grow in a lot of countries where they couldn't before, especially some of your smaller countries. So if you think about that, that also means that our exports without even tariffs, foreign goods are going to cost a little bit more. So that could be good for our economy as well, as to help boost production here, because if things cost more that are coming from overseas, these are all little things. Those things take time to settle into effect. But I think that we're going to start to see that tide, happen probably, I would think, over the next 12 to 18 months is when we're really going to start to see those things. And then you're going to start to really see trends against like I said, Aussie, New Zealand, look at any rally against the dollar now as a correction and get ready to go join that long-term trend. Even if the dollar starts to fall against some of your other major currencies like the pound or the euro. But once again, those are countries too. Their economies are just in such shambles. I don't see any. I could see the dollar maintaining the range maybe that has been in for the past 2 years, actually. We might just spike a little bit higher and lower and maybe extend the top and lower part of that band of those ranges. But we may not see a real serious trend in the dollar index, but not necessarily certain currencies. Once again, like I said, I can see us have a nice trend in those lower base currencies for sure. The euro and the pound, I've been calling for it. I really think the euro is going to get down to parity. The Swiss, however, that's another one. Like, no matter what, even if the other currencies are getting beaten up by the dollar, I don't see the Swiss getting beaten up by the dollar as much. Their economy is not in shambles. So that's a case for why, and that's the reason why the dollar index, you got to realize, even if the euro and the pound, which are the two biggest currencies in the dollar index, are whatever they're doing, if the other ones are not going in the same way, that causes it to be more of a range-bound situation. So the dollar index is going to be a really tough indicator for currency traders moving forward over the next 2 to 3 years, just to let you know.
Man, you got so much great info. Can you hang with us for one more segment, Teddy? I wanted to get into some of, you talked about 2 rate cuts and just kind of get your feeling when they may come, because I feel like they may come, but when? And just talking some rates and some yields. Folks, we'll be right back with Teddy. Stay tuned. Welcome back, folks. S&P's off by 16, NASDAQ 100. We're off by 118 right now, and we're talking to our man Teddy Kekstadt. We're talking some currencies, we're talking some yields. So you mentioned maybe we get 2 cuts, and I was interested. I was looking at the CME when they're pricing swaps in there. Maybe they're looking for 2 cuts by the end of the year. Do you have a timetable? Because everyone wants to know, when's it going to happen? Of course, the Fed, they changed some verbiage last week. They're a little bit more worried about the labor market being so tight, and a little more worried about inflation. What do you think? When are those coming down the line?
Yeah, that's a really good question, Tommy. I think that the second rate cut will probably not come until the third or fourth quarter of the year. Reasonably, I would think that if they're really going to want to do this, I mean, I would be really surprised if they do it in one of the next 1 to 2 meetings. My biggest take is especially like inflation. I mean, gas prices have come down a little bit, but not that much. They're still not going down more yet, so that's kind of a big deal. And then you have to look at what poultry costs. I talked to a buddy of mine. He went to pick up a 1 chicken dinner at a restaurant the other day, $50 for a chicken breast, some broccoli, and a potato. You can get a pound of crab legs. A pound of crab legs. Seriously, I mean, when did a chicken breast dinner cost as much or more than a pound of crab legs? And I've never in my life. So when you look at that, I mean, I talked to my cousin in California. Eggs cost $7.50 to $8.50 here in Chicago. They cost over $12 in San Diego. But you know how much they cost in Mexico? They're like $1. And he's right by the Mexican border. It's ridiculous, So, but we're not going to see those price decreases come for a while. It's going to take 4 to 6 months to really see that, and that's going to hit us a lot. And inflation, I think, is here to stay for a while.
I would agree, man. And the Fed, they seem to agree with the way they changed that verbiage. They're a little worried about inflation. It's not going back to where they want just yet. So we'll find out. Teddy, I appreciate the great info as always, man. Have a great week. We'll talk to you next Wednesday.
Thanks, Tommy. Take care.
Thank you.